Now, accounting for errors is something we're going to spend more time on in this class, and there will be a problem on the test. So there's going to be a change in accounting principle and a change in accounting error. A combination of those two. There's going to be two different problems, and so there's just going to be those are the two types of problems you're responsible for. So errors can be minor or significant. If there is an error, you have to restate all affected periods, all of them, even if they're not presented. So as an example, let's say that you had, as a company, discovered in 2020 that you were recognizing revenue incorrectly. And let's say you've been doing that incorrectly for 15 years. You'd actually have to go back and restate every single year. So that can be quite substantial and can be very costly, and a lot of times can very negatively impact your stock price, both in the short term and long term. So I just want you to be aware of that. That can be a big deal. All right, similar to a change in accounting principle, there may be a journal entry. This little piece is a little out of order from your lecture guide, but I just felt it flowed a little better here. The reason why I say may is because there are two types of errors. One is called a counterbalancing error. And a counterbalancing error is one that corrects itself within one period. So in other words, if I have an incorrect inventory count in 2020, as long as I do my inventory count correctly in 2021, it's going to counterbalance. Now, cost of goods sold is going to be wrong in both years. It's going to be overstated in one year and understated in the other year. But in total, it's correct. And so understand with a counterbalancing error, if it's already counterbalanced, there's no need for a journal entry. So again, that's why we use the word may. There are also non-counterbalancing errors. And so a non-counterbalancing error is one that does not correct itself. So in other words, let's just say that for whatever reason, I always miss inventory that's in transit. Well, that doesn't correct itself. It's an ongoing problem that didn't correct itself. And so that would be a slightly different type. There's all kinds of examples of the different ones, but I just want to be aware, again, a counterbalancing error is one that will correct itself in the future. A non-counterbalancing one is one that will not.